isn't just business news, we're news for business people.
Good afternoon, you're watching Bloomberg Quint Live and I'm Alex Matthew. The headlines. BJP is set to retain power in Gujarat. The Bharatiya Janata Party is ahead in 106 seats while the Congress leads in 70. In Himachal Pradesh, BJP is leading in 45 seats, well ahead of the halfway mark. Congress is ahead in 20. The markets have had a bit of a roller coaster. The benchmarks recover from steep losses early in trade, with the Nifty 50 reclaiming the 10,400 mark. And it's a quiet listing for future supply chain. The stock lists at a premium to its issue price of 664 rupees per share. And with that, it's over to Darshan Mehta for Hot Money.
Thank you, Alex. Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. But first, let's start off with the trends that have come in so far, and Kaushik Vaidya is here to take us through the key highlights so far. Kaushik, over to you. What are you spotting?
After that drama of the first hour or so, where the early trend showed that the Congress was giving the BJP a tough fight and the numbers were running neck and neck, the numbers as of noon are conclusive. The BJP is leading in about 105, 106, 107 seats out of 182, well past that halfway mark of 92. So you have now a BJP government that will come into power for the 6th consecutive time in the state of Gujarat. And look where that has come from. Parts of Saurashtra might have moved towards the Congress, but the BJP is held firm in South Gujarat and in parts of Ahmedabad, where that has been its traditional bastion. And there is one number that is fascinating. If we move to the vote share that the BJP has got in this election, the BJP is actually inched up how many votes it has got. It was about 47%, 48% in the last election. That's nearly 50% in this election. That's remarkable for a party that is winning its 6th election on the go in the same state. Let's go seat by seat now very quickly. In the seat of Rajkot West, you have Chief Minister Vijay Rupani, who's won this seat and who might well be decided by the central leadership of the party to keep in power as Chief Minister of Gujarat. Move on to the seat of Mehsana, where Deputy Chief Minister Nitin Patel has won this seat as well. This is a narrower margin. There might be a round or two voting left, but he was trading the seat earlier, but Nitin Patel, Deputy Chief Minister, is also leading. The third seat, where Water Minister and Agriculture Minister Babubhai Bokharia has won the seat in Porbandar, defeating Arjun Modwadia of the Congress. Arjun Modwadia lost this seat by about 1,800 votes. In the seat of Vadgam, you have Jignesh Mevani. Remember, this was an independent candidate that was propped up with the support of the Congress. He's leading by about 20,000 votes in the seat of Vadgam, and rather, which is where Alpesh Thakur stood as a Congress candidate, he is leading as well. There are two particular districts I'm going to go to show you where the BJP has been able to hold on to this election. Let's first go to Surat. Remember, Surat was where much of the protests against GST happened in the state of Gujarat in the last few months. You had textile and other industry workers who went and made representations to the government asking for changes. Within Surat, 15 is how many the BJP got the last time. Look how many has been able to retain, 14. So protests or not, the BJP has been able to keep Surat and that larger region, all of Surat city in that, and then the larger region as well. The second one is this bastion of the greater Ahmedabad region. Remember that this again, the BJP got 17 last time, it's gotten 17 now. This is largely where the BJP is retaining this election. Let's move over to the other one now. It's number 19. The 19th NDA government in India will be formed in the state of Himachal Pradesh. The BJP is 44, well past the mark of 35. Prem Kumar Dhumal becomes Chief Minister yet again. There are three seats that we'll focus on. The outgoing Chief Minister, Veerbhadra Singh, from the seat of Arki, he is leading by 3,600 votes. His son, that's the seat that Veerbhadra Singh moved away from, Shimla Rural. In Shimla Rural, Vikram Aditya Singh is leading as well. And finally, the incoming Chief Minister of Himachal Pradesh from the seat of Sujanpur, that is Prem Kumar Dhumal. That I don't, well, we'll see if that is updated and whether there are a few rounds of voting left, whether that is how it stays and whether that is how it will end. Because he'd been announced, unlike Gujarat, as the chief ministerial candidate of Himachal Pradesh. As things stand, Himachal Pradesh becomes the latest tally government to be added to the BJP tally. That's the 19th out of India's 31 states, Darshan.
Okay, many thanks for that, Kaushik. Former Gujarat Chief Minister Anandiben Patel admits to the BJP facing difficult questions in this election and believes that the shortfall in seats won by BJP in Saurashtra should be introspected. Let's listen in.
मैं मानती हूँ कि 110 से ज़्यादा सीटों से बीजेपी जीतेगी और सरकार बनाएगी। ये पांचवी बार भारतीय जनता पार्टी सरकार बना रही है। बहुत ही कठिन परिस्थिति थी क्योंकि हमारे सामने भी कई प्रश्न थे ही। सौराष्ट्र में हम कम पड़े हैं ऐसा लगता है, तो नतीजे के बाद, सरकार बनने के बाद पार्टी जरूर बैठेगी और इसमें क्या क्या हमारी गलतियां रही, क्या कमियां रही, क्यों हम पीछे रहे, ये सब हम ढूंढ निकालेंगे और इसमें सुधार करने का जरूर प्रयास करेंगे।
Okay, let's move on with Hot Money and let's welcome our experts on the show. T.S. Harihar joins us on the show, so does Senthil Manikandam. So, the stocks that we'll discuss on Hot Money today will be Vedanta, Apollo Tyres, Avenue Supermarts, JSW Energy and HCL Tech. So, these are the counters that we'll be discussing in Hot Money. Let's start with the first stock, and that is Vedanta. This counter has been buzzing ever since. There was this big note that came out by Credit Suisse with a big target price. Also, metal prices across the board have been rising. Today also on Shanghai, most of the commodities are doing well. Is the rally for metals here to stay, and what's the view for Vedanta? I'll start with you, Hari. What's your view on Vedanta? Do you think that metals as a pack has rallied? Do you think that it's enough now, or there is more legs for the metal stocks to move, especially Vedanta?
See, I think metals as a commodity has a lot more of legroom left, and that obviously means that stocks like Vedanta, especially have a lot of steam left. And we especially like the space of copper and aluminum, where Vedanta has an extremely strong position. So, considering that both copper and aluminum are going to see tremendous demand coming in from China, there's a huge investment, planned by China. And assume that the $1 trillion infrastructure spending that Trump has been talking about, that also materializes. I believe the next 5 or 6 years could actually belong to metals, and if that happens, I think Vedanta is going to be in a very good position. Let's not forget that Vedanta also has a very strong oil franchise, and the price of oil is now close to $65 a barrel. So I think that is also something we're not factored in. If you factor all that in, I believe that it should at least be about 400, 420 on a SOTP basis on the short term. Long term, I think it should be much better than that.
Okay, so it's a positive view that's coming in from Hari as far as Vedanta is concerned. What about you, Senthil? When you view on Vedanta, what are the valuations looking like? Because if you're looking at the street, out of 24 people who cover, 23 have a buy call and 1 is a hold call. So the street is bullish. What's your view?
So if you look at Vedanta, they are diversified metal space. They are present in zinc, aluminium, silver, copper, etc. And they are also present in oil. If you look at the percentage, zinc contributes majority of their profits and EBITDA margin because they are holding 65% in Hindustan Zinc and 100% wholly owned subsidiary of Zinc International. If you look at zinc prices, in last 6 months they have rallied by 30%.
Okay.
This is because in 2017, zinc has a deficit of around 2 lakh tons.
Okay.
If you look at the December report put out by Jiangxi Corp of China, they are the largest zinc manufacturer in China. They have forecasted a surplus in 2018 by small amount of 3,000 tons, while the surplus could increase going forward in 2019 and 20. By 20, they are factoring in a surplus of around 3.5 lakh tons.
Okay.
So we are not expecting zinc prices to rally from here. So this is really a negative factor considering Vedanta. But on the other side, if you look at aluminium, we are positive on the aluminium because of the winter cuts happening in China. And also, if you look at the domestic side, Vedanta has been one of the lowest producers of aluminium because of their ownership in Balco. So putting together and the cash flow that is occurring from zinc, the company is able to surplus cash flow is put into the capacity expansion. So we are neutral on the stock.
Okay, so it's a neutral stance that's coming in from Senthil, while Harihar is extremely bullish on Vedanta because whatever they are into, all the commodities seem to be doing well. Let's move on to the next stock, and that is Apollo Tyres. Now, if you're watching what the company's been doing with its disclosures on the Bombay Stock Exchange, you can make out that the company in the last 1.5 month, the promoters have bought in 7.5 lakh shares in the open market. So the promoters themselves seem to be bullish, but what are our experts guessing? Apollo Tyres, Senthil, what do you make?
So if you look at the tire companies in the last 3-4 years, they have got a huge tailwind by of lower rubber prices.
Yes.
So if you look at the margins, in FY16, their EBITDA margin is around 17%. It has gradually reduced. We are expecting around 10% EBITDA margin for this year.
Okay, for Apollo.
For Apollo. So the tailwind because of rubber prices is gone. So from here on, it is going to be the capacity expansion coming into the industry, plus the anti-dumping duty that the government has put on the Chinese TBR tires.
Okay.
So for Apollo, we have to look at two segments. One is the European operations and another is Indian operations. Indian operations, we are positive on the volume growth side because of this anti-dumping duty, plus Apollo is doubling its capacity in its Chennai plant.
Okay.
And if you look at the European operations, they have started their Hungary operations in the last quarter of FY17 and they are ramping it up.
Yes.
And from Hungary, they are going to supply to the OEM of the European manufacturers. In Hungary, if you look at the employers' cost, it's 50% cheaper compared to their other European operations. It's clearly positive. So we are positive on the volume growth side, but because of rubber prices, I think we are negative on the.
So what's your overall view on?
What are you neutral on the stock?
You're neutral on the stock. What about you, Harihar? Any view on Apollo Tyres?
I mean, I wouldn't say we are bullish, but we are probably moderately we like the stock. And we like the stock for two reasons. One is, we believe that the economic turnaround in Europe, which we have seen in terms of the European EU GDP, I think that should substantially benefit the European operations of Apollo. So that, I think, remains a positive. The second, I think, as far as the dumping duty on anti-dumping duty in the radial tires is concerned, I think that should again serve Apollo well in the medium term. I agree with Senthil that the rubber story is more or less over. There's not much of steam left on the rubber side of it. But I think we just add up the EU growth story and the anti-dumping duty on radials. And if you look at the way government has dealt with metals, I would believe that this radial duty could continue for a much longer time than we originally anticipated. So we are moderately positive. We don't see it as a great outperformer, but definitely I think one can look forward to over 10 to 15% upsides in the next 1 year.
Okay, so that's the view that's coming in on Apollo Tyres. Senthil has a neutral view. Given the fact that what's happening with rubber prices, Harihar is moderately bullish, so a 10-15% upside is something that could be potential for Apollo Tyres going ahead. Let's move on to the next stock, and that is Avenue Supermarts. The company has managed to rally significantly, but now a lot of negative reports seem to be coming in, a lot of negative brokerage reports. What do you make of it, growth versus valuation? That is the big question that you have to ask for Avenue Supermarts. What do you make? What do you choose for Avenue Supermarts, growth or valuation?
See, I would still bet on growth, because let's understand that retail is an extremely under-penetrated business. It is organized retail. If you add unorganized retail, it is huge. But then if you add up the shift from unorganized to organized, I think it's a $1 trillion opportunity yet to be tapped. So if you look at it from that perspective, I think growth in retail from here on is actually going to be geometric, not arithmetic. So I think if you look at it that way, there's a big growth story in front of us. Valuations, see, we've always had these kind of pockets of overvaluation because there is the entire sector is sitting on a cusp of big growth. So I think I wouldn't read too much into valuations. I'm told it's the most expensive retail stock in the whole world, but I think compared to the kind of potential you have for unorganized getting into organized, so I wouldn't read too much into that. But I think in terms of financials, there are 2-3 positives. One is if you look at the per square feet, the per employee productivity, they are the best in India.
Okay.
I don't think there's anyone that comes close to them. Number two, if you look at the fact that they have raised money in the IPO, a lot of that is going to get into repaying their debt, which they're actually used to acquire properties at various points of time. So I think they don't have the rent worry that a lot of other retailers have, and they're going to reduce that debt. So if you add up all these things, I think they're in a very, very sweet spot. Nothing may happen in the next 3 months, but I think if you take a long-term 1 year, 1.5 year view, we think it's actually underpriced even at these levels.
Okay, it's underpriced. Do you believe that it's underpriced, or would you select valuations over growth for Avenue Supermarts?
So it's a long-term bet for us. Like if you see next, maybe current valuations at 90 times 1 year forward earnings, next 2 to 3 years the returns may not be that much great. But if you take a 3 to 5 year time frame, currently this is the best play in the retail, because value retail is a very tough business to crack.
Okay.
We have seen the players like Subiksha coming into the market earlier than the D-Mart. They in 1999 they had around 14 stores. They went for an aggressive expansion of around 1,600 stores in 2018. But because of this aggressive expansion, they have resulted in failure. But if you look at the Avenue Supermarkets, they started in 2002 with one store, and by 2008 there were only 10 stores. From 2008, now they are having around 130 plus stores. So we are seeing a management capability in steady expansion coupled with growth and profitable growth. They are the second largest retailer, but they are the most profitable retailer in India.
Okay.
So clearly the management capability is there. So premium should be given for this company. And growth wise, last 5 years profit CAGR of around more than 50% is there.
Okay.
So even on PEG ratio, it stays around 2 times. So clearly short-term valuations are not comfortable. Returns may be a little bit tepid. But on the long term, 3 to 5 years, we are bullish on the stock.
Okay, so it's a consensus bullish view that's coming in on Avenue Supermarts because the fact that it's growth selected over valuation. Before we move on, here's a quick recap of all the guest views on the stocks that we've covered till now. Okay, JSW Energy is the next counter that we are speaking about. The counter did manage to rally over the past few days, given the fact that there was this very bullish note that Access Capital came out with a target price of 100. But still, it's not been a massive outperformer. It's gained 35% this year, much less than some of the other peers that have done well. Hariyar, what do you make of JSW Energy? Access Cap is rather bullish. They have a target of price of almost 100. Valuations of 17 times this year, 15 times next year. Is that fair?
See, I would probably believe that what the targets they are putting is fair. But if you look at it at a current price of about 82, 83, there is not much of an upside left in the stock. Frankly, I have not looked at the stock very closely as I would have looked at any of the power company. But on the power sector as a whole, energy sector as a whole, we continue to be a little cautious. So we are not very positive on the stock, largely because we don't like energy as a sector completely. So yes, we are negative. So probably there could be a little bit of upsides, but honestly, that would not be our pick. So we continue to be negative as far as JSW.
Okay, what about you, Senthil? Any view on JSW Energy?
Yeah, so we are positive on the stock. Basically because if you see the entire power industry, JSW Energy has been one of the best players with a profitable growth. They make an EBITDA of around 3,000 plus crores. If you look at their next 2 to 3 years plans, they are foraying into the EV space.
Okay.
They're going to put a capex of around 4,000 crores and they're planning to release first variant of EV space by around 2020.
Okay.
So what I'm saying is next 2 to 3 years, their entire business model is going to change. From a pure power producer, they're going to be an automobile maker.
Okay.
Coupled with, if you see the entire power space, there are 90 gigawatts of standard power units.
Okay.
Management has mentioned they will be looking for value accretive deals in this space. They have a strong balance sheet. Even after acquisition of JPS, which is hydropower, their debt to equity is just 1.2. So they clearly have enough leverage to get into value accretive deals in the future in the power space, coupled with their EV foray.
Okay.
If you look at the management, either be JSW Steel or cement or even in power, management has shown clear capability in going through rough funds. While the entire industrial industry is going through tough times, JSW Steel has been a best performer.
Okay.
So management capability is there. So we are positive on their EV foray also. So we are bullish on the company.
Okay, so a negative view and a positive view that's coming in on JSW Energy. You heard the arguments on both sides. And the final stock that we'll talk about is HCL Tech. The counter is up almost 8% from the recent lows. One of the cheapest stock as far as the large cap IT space is concerned. Trades at a multiple of 13 times on an FY19 compared to TCS's 17 times and Wipro and Infy at 15 times. Is it a value buy at this point of time? Senthil, I'll start with you. HCL Tech, what's your view?
So we are bearish on the company.
Okay.
Mainly because if you see currently they are trading at a 30% discount to TCS. This is because more than 30% of their revenue comes from the IMS division. The infrastructure management division is going through a tough winds because traditional IT has been facing tough winds. They are not able to ramp up the growth.
Okay.
And if you look at the PE, it seems to be a little bit cheap, trading at around 12 times FY19. But if you factor in a big ratio is trading at around 2 times. They are factoring in 8 to 9% growth, but if you look at the PE of 12, so it's 2 times. So clearly it's not cheap from the PEG ratio. And recently the management has gotten into these IP deals. So they are venturing into buying intellectual property deals from the players of like IBM.
Okay.
And then they have licenses out for the 5 to 15 year period, and they are developing it out.
Okay.
This is positive, but the revenue growth from this is going to be a little bit in the 3 to 5% CAGR range.
Okay.
So since the revenue growth is not your bearish on the stock.
Okay, so a bearish view that's coming in on HCL Tech. What about you, Hariyar? Your final view on HCL Tech, valuations attractive, or would you also look at growth, what Senthil has been speaking about?
No, I would broadly agree. We remain cautious as far as HCL Tech is concerned. In fact, the entire tech pack, we continue to be cautious. See, I believe that short term there could be some upsides because, we are going to see around 3 or 4 rate hikes next year. So dollar gets stronger. So obviously a lot of these tech stocks are going to benefit. But, if you look at the discount in valuations, as Senthil also rightly said, there is a strong justification with the discount. Because if you look at a TCS, 33% comes from SMAC, which is the digital part of it. If you look at, I think HCL Tech, it is probably not even 10 or 11%. So I think there is a huge catch-up that HCL Tech needs to do as far as the SMAC side of the business is concerned. So I wouldn't read too much in the valuation differential. My only concern is, number one, tech as a whole will continue to be negative. And HCL Tech probably, yes, because its valuation, it may see some upsides on the back of the rupee. But fundamentally, we don't see any positive triggers as far as HCL Tech is concerned.
Okay, so even if you see the chart, HCL Tech has been a marked underperformer for the past 6 months. So before we wrap up on the show, here's a quick recap of all the guest views on the stocks that we've covered till now. Okay, Hariyar and Senthil, thank you so much for joining us on the show. With that, it's a wrap on today's Hot Money. Ask BQ comes up next. Stay tuned to Bloomberg Quint.
सर ये नया प्रोजेक्ट ना